The market changes and people change, and ultimately a whole bunch of stuff happens to you that you did not expect to happen. That's the life of a realpreneur and a real estate investor. And that's why it's extremely important to make sure that your business plans and underwriting models are as dynamic as possible. In today's episode, I'm going to show you how to become a dynamic real estate planner and real estate underwriter. I'm Nikolai Ray, and I'm the CEO of the MREX, and welcome to Realpreneur Principles, where every single episode I take a couple minutes out of my day to share with you practical knowledge and experiences that I have gone through as an investor and an entrepreneur over the last decade and a half in order to help you achieve your goals and achieve your objectives as quickly as possible. Now this week, I don't know why, but I've had a whole bunch of discussions with various investors and realpreneurs about business plans, underwriting, forecasts. And what I've realized is a lot of you who are listening right now make the mistake of either writing a business plan or writing an underwriting model to buy a property and then just sit on that and use that as like a static piece of paper or document, and you never revisit that. And the thing is yes, I mean, we've talked about this in previous episodes, the importance of strategic planning, the importance of taking time to think things through and to make sure that you're putting in the right steps and timelines. But ultimately, one thing that you must not forget as a realpreneur and a real estate investor is to constantly readjust and to constantly adapt to what's going on. Now, let's take an example of a financial model that you underwrote in order to buy, say, a 50-unit property. So the idea is that your underwriting, say, ex ante, so prior to purchasing the property, is based a lot on how you can value future cash flows, how you predict or forecast where cap rates are going to go, where interest rates are going to go, how is inflation going to affect the property and the rents and the expenses that you have. And ultimately, it's a very, very tough science and tough mathematical art, especially if you don't have a background in, say, Monte Carlo modeling and various stochastic methods. So you want to make sure that even though you analyze a property and underwrite it before purchasing it, once you do acquire that property, make sure that you revisit your projections at least on an annual basis and hopefully on a quarterly basis. That way, as you get closer to the ex-post projections, so let's say you projected an exit cap rate of 6% in 5 years. Well, the closer you get to the 5 years, so say by year 3, your projection should be actually much more tighter, and the probability of it being right or pretty precise is going to be a lot higher than when you projected it prior to purchasing the property 3 years ago. So you want to make sure that you're always adapting and readjusting the way that you have projected what's going to happen and what you hope to happen and what you hope not to happen also. And that's the same whether it be for an apartment building or overall for a business with revenues, with expenses, and with debt. Because ultimately, no one can tell the future. We don't have a crystal ball. No one's really able to precisely, to the T, project what's going to happen in 3, 5, 7, and 10 years. So your job as a real estate entrepreneur and as a real estate investor is to be able to always kind of be ahead of the curve, always be adjusting, always being ready for what's coming and not reacting to what has happened. And if you can do that, you can not only survive the tough times, but you can actually use those tough times to thrive even more and to propel your successes, your profits, and your returns. And on that note, I think it's time for you to go and pull out your business plan and pull out your underwriting models and deep dive back into them and adjust them and get ready to go even harder in your real estate career and real estate investments. In the meantime also, please, I'd appreciate it if you went on iTunes or Google Play or YouTube. Make sure you subscribe and also leave a vote, leave a comment. And if there's anything you'd like us to talk about in the future episodes, please don't be shy.